Hey everybody, Chuck Barone here. It is Monday, August the 28th, 2023, and we're off and running already, man. Crazy times ahead. It's going to be a big week this week, actually. Not a tremendous amount of data coming, but the data that we will get is important stuff as we wrap up this month. This quarter's going by quick. GDP now says it's an amazing quarter. I don't know, are you feeling like the economy is really growing? It's not here in Vegas, at least for us real estate guys. Anyway, before I get rolling on the show today, let me welcome everybody. As always, thank you guys for your support. You guys showing up here every day and watching the videos, hitting us up in the comments. Everything you guys do every day keeps the show rolling, guys. We appreciate you. All right, so let's talk about these markets today. We know we got a big week of data coming up this week. Really important stuff that'll give us, after Powell's speech last week, which I guess the market is interpreting the way they want to interpret it. The bears heard Powell bearish. The bulls heard Powell bullish. And the market reacting that way. It's just, I think, as confused as the Fed is with the conflicting data they're getting, the market, just because of, I guess, interpretation, also mixed. It's just the weirdest phenomenon going on right now where there's no really clear direction, right? Is this a bull market? Is this a bear market? Are we really heading toward a recession? Or GDP now says we're growing 5.8%. You know, is the economy really expanding in a big way like that? So a lot of crazy stuff going on, but these markets taking it all in stride, So today we see the stock market jump again, the Dow jumping 247 points, 34,559 on the Dow. The S&P up 27 points, a pretty good move for the S&P, 4,433 on the S&P. And the NASDAQ up 114 points, 13,705 for the NASDAQ. So a decent positive day for stocks. I think the bond market, calming down a little bit today helps stocks a little bit. I think stocks are going to continue to face pressure, though. I don't get the big bullish sentiment. I'm not feeling bullish right now. I think company earnings are going to have some struggle to keep the earnings going up quarter by quarter, especially with election year coming up. Then you add in, all the extra pressure coming from geopolitical events. You got real estate tanking, you got commercial real estate coming. It's going to be the big one, man. And so with all of this stuff going on, a lot of uncertainty, but the market's acting like it's full steam ahead, man. Bond market today, kind of, the 10-year rallies. So the 10-year price is up. The yield coming down 3 basis points, sitting at 4.21% for the 10-year. The 2-year flat today, no up or down on the yield, sitting at 5.05%. So the inversion kind of getting spread out. It was in the 60s. Now we're back into the 80s. And, that's a high number on the 2-year. I think that, this bond market is literally sitting on pins and needles waiting to see what happens next. The bond market now has pretty much priced in 80% probability that there will be no rate increase at the September meeting. 80% probability. Give me odds, because I think there's going to be an increase in September. We'll know more about that toward the end of this week when we see some of these numbers. But, this is what I've been talking about, the upsetting of the apple cart. Any bad news whatsoever puts this whole scenario that the market's banking on, this perfect scenario, in jeopardy. So, as it stands today, though, even though it's shaky and there's cracks in the glass everywhere, still holding it together. The dollar today down very small, still up over 104 on the index, 104.02. So the dollar still strong, not a lot of news with the dollar. Metals today, mixed numbers on the metals market. Gold rallies, gold up $4.60, 1,000 $919.40 for an ounce of gold. Silver falls 2 cents. Not much of a move. $24.20 for an ounce of silver. I think there's plenty of room to rally in gold and silver. And as this dollar comes down to earth, you're going to see those prices spike. Oil today up small, up 31 cents, but back above $80. $80.14 for a barrel of West Texas Intermediate. I'm telling you guys, I'm not buying this rally. I think that it won't be long and we'll be seeing oil 70 to 75 again. Bitcoin down again today, down $101, 25,994 for Bitcoin. I think all things considered, that's a pretty fair price. Some of the stuff I've been reading predicting a rally, a lot of conflicting data there though, because a lot of people feeling like the best days for cryptos are over. We'll see. It's going to be an interesting tug of war there. All right, so let's talk about markets this week. This week's going to be an important data week. Today is a quiet day, though. Not much happening today. Tomorrow we'll get started. We'll get consumer confidence numbers tomorrow, which are expected to be down, so we'll see where that comes. On Wednesday, we'll get second quarter GDP, expected to be up 2.4% for the second quarter. We'll get the mortgage bankers index, which will show real estate in a tough time, refi and purchase business both down. On Thursday, we'll get the PCE. Now that's going to be the big one. Those are the numbers the Fed's looking at, even more than CPI, PPI numbers. I think last month was 4.2 on the top, 4.7 on core. So we'll see where that comes in on Thursday. We'll also get jobless claims on Thursday, which are expected to come in at 235K. We'll get personal spending, which is expected to be up. We'll get personal income, which is also expected to be up, and we'll get the Chicago Purchasing Managers Index, which is again expected to be up. So if everything goes well on Thursday, that should be a pretty positive day for the stock market. We'll see, though, the big news, of course, jobless claims, PCE numbers, but personal income, personal spending, that's going to be interesting too. We'll get a little more idea of what consumers are spending on and why they're spending so crazily. On Friday to finish the week, we'll get non-farm payroll numbers. Now they're expecting 165,000 jobs added in August versus 187,000 in July. We'll also get the unemployment rate, which is expected to be unchanged. We'll get construction spending, which surprisingly is expected to be up. Not sure if they're actually building more or if it's just the cost of goods being higher. And we'll also get the ISM Manufacturing Index, which is expected to be unchanged. So it's going to be toward the end of the week, this Thursday, Friday data, it's going to be huge, guys. It's going to, if these numbers come in and show inflation not trending down, which is where the Fed has to have it, man. Okay, it's got to be showing down. So we know the numbers came up last month, right? If they go up again this month, I'm going to guarantee you that 80% probability of no rate hike in September is going to go down pretty dramatically. Those are going to be important numbers. Of course, we'll be here to bring you guys everything you need to know. Home builders in the U.S. raising prices. Why? Because they can. They have no competition right now from existing housing. Driving buyers, whoever can afford to buy real estate with prices and rates where they are, to new builds. Builders responding, removing any kind of real incentive for the buyers. And now raising prices. Go builders. Interesting article I read today about China. Now our friends in China got some big trouble coming. I don't know if they're just behind us in the way their economics are, but it looks like China about to experience what we did in 2008, only even bigger, even worse, right? So Evergrande, which was once China's largest property developer, has completely crashed. Their stock is on the NASDAQ. The stock falling almost 90%. Now in penny stock territory, about 35 cents a share. Can you imagine? Once one of the biggest developers in the world, That's a pretty big fall. The company was once valued at more than $50 billion. $50 billion. Today, less than $500 million. Now the company, the worst part about it is the company is still bleeding cash. They're losing money. Huge losses piling up. And then you add in other Chinese developers, right? Country Garden and others, all in the same kind of condition as Evergrande. They're just the one leading the parade. It's going to be a big, big, big problem in China with residential real estate. It's going to put big pressure on Chinese banks, of course, then huge pressure on the Chinese government. What's going to be fascinating is to see how the Chinese handle it. You know, you have an authoritarian government there, so they won't be getting protests in the streets like we get here, right? But it's going to be interesting to see how the government reacts. Are they just going to deal with it? You know, let the people know that here's the problem, here's what we're doing? Are they going to create some kind of distraction somewhere? Are they going to dip into their coffers and do some kind of, you know, pumping up of the economy somewhere? It's just going to be fascinating to watch, but it's going to be, you know, tough times coming for real estate in China. Economists talking about a Lehman moment. Now, some of you guys are young watching this show, you may not remember that, but back in 2008, when everything was cracking up here in the United States, the collapse of Lehman Brothers, one of the biggest investment banks on Wall Street, kind of ushered in the Great Recession of 2008. Now, the scale of what's going on in China is going to make Lehman and make what happened here look like a walk in the park, guys. So very, very tough times coming for China. And one last thing, I wanted to talk about Powell's speech. You know, that was the big event last week. Powell talking pretty much out of both sides of his mouth. People hearing what they wanted to hear, I guess, because I did. I heard Powell talking tough. I expected him to, but I really expected him more to telegraph what the heck was coming next from the Fed, which he did not do. He used this quote. The writer of this article I was reading went to this quote. He said he was, quote unquote, navigating by the stars under cloudy skies, unquote. Well, that doesn't make, you know, if you read that line, that's not exactly going to inspire confidence that the Fed knows exactly what in the hell they're doing, right? I mean, navigating by the stars under cloudy skies means how do you interpret that? You can't see the stars, you're navigating anyway? You could end up anywhere, right? They also talked about, you know, the scenarios between too much Fed raising, too much tight, versus too much or too little tightening. I thought that was an interesting strike there because obviously they're implying that too much tightening, of course, cause a recession is worse than too little, which just keeps inflation numbers real high. I would rather have the recession than continuous, everlasting inflation. They talked about the conflicting data we've all been dealing with. You've heard me complaining about that on and on and on ad nauseum on this show, how a lot of this stuff is designed to confuse. Then they talked about longer versus higher, right? So instead of raising rates higher, just keeping rates higher for longer may accomplish the same thing. I call this complete and utter bullshit, but, you know, take it how you will. I think what we're going to get is higher and longer. It's the same thing I've been saying from the very beginning. We certainly have got quite a few things right on this show. We didn't miss on that recession last year, though. I really thought we were moving toward recession. The 2 consecutive quarters of negative GDP, you know, had me convinced, okay, this is going to come. And of course, my own personal situation with real estate crashing did not help me in my interpretation. But, you know, what do you guys think? Is that recession still coming? Because the economy isn't showing it right now, at least most sectors of the economy. So fascinating times coming, of course. We're going to get a lot of new stuff coming. This is going to be a huge week for us. We're going to be here to bring you guys the news you need. As always, if you like what you're hearing, guys, please hit the like button. It helps us out. It changes the algorithms around. It gets our video out in front of more people. We get more views that way. Hit me up with your comments and questions. We'll be back tomorrow to bring you guys the news you need. Until then, guys, take care. Thanks.